Investors and traders, welcome to the channel Market Chart Pattern. Today is 3rd of February 2025. Hope everyone is having a great day. We will be taking a look at the key US markets and an update on the stock indices. As always, this video is for educational purposes only. It is not a financial advice. So here we are looking at the daily chart of US dollar. Look, over the weekend we had the news of tariffs come in. When the markets opened, there was a lot of volatility in the stock indices, pretty much all these active traded future markets. And for the dollar, we saw a really nice big move to the upside. And look, it's been a big reversal today. It's just resting on the 20-day moving average. And in my opinion, it's got the potential to be actually a double top formation with respect to the top, which came in on the 13th of January 2025. So keep this date of 13th of January 2025 in mind, because that's a key date for the stock indices as well. So we have seen the weakness come in into this market for the US dollar, and what it meant is that if we take a look at the US euro versus the US dollar, look from our levels that we had been watching, we have seen a nice bounce today in the euro currency. We need to actually really wait for it to get above this 78.6% retracement, is 1.0535. That would be an indication, an early indication. We might have seen a pretty good low in the euro currency versus the US dollar. And then if we just take a look at the British pound versus the US dollar, we can see a very nice strong day in the British pound as well. So this low that we had been looking at, because of all this pattern formation, maybe it has a tendency to be a important low. So we need further confirmation. The market needs to get above this 125.65 level. And if we take a look at the Japanese yen, here we go. So the Japanese yen, you can see that is actually, this market has held quite well, and I think is poised to go higher. And the chances are we might actually get this gap fill, this region that I've drawn. There is still a chance for it to happen. Although the US dollar is weakening, but the Japanese currency, might be weakening as well. So by the looks of it, this is what might happen. But if we break below the 89 period moving average, then I think we have a continued move lower. Now let's take a look at the crypto. So we'll start by taking a look at the Bitcoin. So yesterday when I did the weekend review video, the Bitcoin market was indicating a risk off environment. This is exactly what we saw, and I had drawn this potential ABCD pattern, and the market would get right into the 78.6% retracement. This is what actually transpired, but the move was quite volatile, and in fact it went lower. So we saw a move of about 3 to 4,000 points in Bitcoin, but it has actually closed above the 61.8% retracement. In other words, let me actually draw this pattern that I was watching like this. So I believe visually it'll be a little bit easier to visualize. So our ABCD was right here. This is what I was pointing out, right towards the 61.8% retracement, where in fact it went a little bit lower as well. And the most interesting one is actually Solana. Here we go. So in Solana, this is exactly what we are discussing yesterday, that I believe we are actually in this blue ABCD cycle higher, where we could see 318 to 320 Solana per the dollar. And the key part was this 78.6% retracements to be held. Because this is the biggest retracement we have seen in this cycle, and if we just use the market symmetry concept, it was also pointing out about 196. So the markets were really volatile today, and of course it went much lower, but the important thing is it's likely to close higher, above the 78.6% retracement, which is going to be a really good positive sign in my opinion. This just reinforces the fact that we are actually in this blue cycle, so we could see higher prices in Solana to come. Now if we take a look at Ethereum, Now Ethereum is really interesting because I had these ABCDs, the blue one, the red one. So we're really looking for 2730 to around 2530 as the level, because it's 78.6% retracement. But the market actually, you can see that it just almost took out the lows of 5th of August. This is how much volatility was in the Ethereum, but it's poised to close much higher like this. It's got a a pattern formation. So yeah, looks like the crypto now they're bouncing back, and the US dollar is actually also weakening. We'll get further confirmation in tomorrow's trading. Now, let's take a look at the. Uh, okay, here we go. So we are taking a look at the yields. Here we go, and this is the US 2-year Treasury note. Here, the interesting thing is that the yields are actually kind of stable today. So in fact, they rose a little bit, but it found some resistance. But nonetheless, they have been a little bit stable. Now, if we take a look at the TNX, and what we can see is that this is the 10-year Treasury yield, 10-year Treasury yield note, 10-year Treasury note yield, and we have seen the yield actually rise. And look at this, there's a trend line as well. So there's a tendency that we are going to see actually higher yields, and the reason is that if we take a look at this on the futures chart, we can clearly see the bearish symmetry is still in place. This is something which we spoke about yesterday, and also the market has retraced right to the 38.2% retracement. So if I draw from here to here, actually I think yes. Okay, what? Yeah, it's getting very close to the 61.8% retracement on the 10-year Treasury note, but this is actually also a 38.2% retracement. I believe it's from these highs right here. Yeah, this is the one I wanted to draw actually. From these highs, this swing, this is 38.2% retracement, and what we have seen is actually the price pullback or the yields rise. And if I just move this to a 30-minute chart, this is something which I was watching intraday. In fact, we also had this nice ABCD right here, right at the 38.2% retracement. So there's a strong resistance right at this level. So the yields are likely to move higher in 10-year note. It could be shorter term. We see maybe a pullback into 108.15, but the chances are we are actually moving lower. Now, let's take a look at the long bond futures, and you can see that I believe it's also a 38.2% retracement from these. Yep, in fact, it closed below this as well. So there you go. This is what we are looking at in the yields for the long bond futures. Now let's take a look at the stock indices. So we'll start by taking a look at some of the European stock indices. There we go. German DAX opened with a gap, pretty big gap, closed higher. And then in the FTSE in the United Kingdom, this is what we see, a negative candle. Now let's move to the US. This is the S&P 500 cash, and here what we were watching yesterday, I mentioned that there were really two things, there were two possibilities, so we needed further price action for confirmation. Either we were in this blue cycle ABCD higher from this low which came in on 27th of Jan, and of course the 13th of Jan low is a really important low. There's a chance of this, but the higher probability was because we closed last Friday below the 78.6% retracement, we could be in this ABCD corrective structure lower, and this is what transpired with the pretty big gap which especially in the futures which took place over the Sunday night. And right here we are just above the 61.8% retracement right here. I think if I try to illustrate this like like this, like this. There we go. Uh, so I think, well, this structure has changed a little bit, like this now. But I think we got a pretty good chance that the market could actually begin to rally from here. This has a chance to be a pretty good low because we have confluence of two things coming together: the 61.8% retracement from the 13th of Jan low to these highs, and also a the ABCD is a 1.272 projection. So the CD leg is 1.272 times. These are not 100% because the market was a little bit stronger, but they came very close. There's some expansion of the BC swing which I have not drawn here. So it's got a chance of a pretty strong support right here, and if we begin to close in the upper boundary of this candle right here, then the chances increase. We are in this CD leg higher, and we could be marching towards 6,300 on the S&P 500 cash. If we just take a look at just going back to the chart, let me actually also mention that the 13th of Jan low is really important. If we begin to close below this, then things are changing in the market. And if we take a look at the futures chart, here we go. And here we go on the futures chart. What we can see is pretty big. There was a pretty big gap. The S&P 500 futures were down quite a lot on Sunday night, but they have recovered. The support also came in from the 89 period moving average. Here I have not drawn the ABCD, but we could. Let me try drawing it this way because it could be because of the gap. I think there is an extension of it. Actually, no, it was a really nice ABCD 1-to-1 projection. So let me get rid of this to clean up the chart. Here we go. Let me actually try to draw this like this with the shaded region so it's easier to see visually what we are talking about. There we go. So really nice ABCD pattern. And then if we just take a look at this, assuming the 13th of Jan low is held, we could be looking at an ABCD structure which could see us go anywhere between 62.45 to 63.62 on the futures chart. So this is what we'll be watching for. Now the key is for this, the structure of ABCD, the 13th of Jan low needs to be held. If it's broken, then things are changing, right? Now let's take a look at the NASDAQ 100, the cash chart. This is NDX. And here what we can see is the market pulled back right into the 61.8% retracement. Is above this channel right here that has been held. That is all positive for the NASDAQ 100 stocks. And if we take a look at this on the futures chart right here, we can see that it has actually held and 89 period moving average, and also it appears to be stronger than the S&P 500 because the S&P 500 did that ABCD pattern, but this one just found support from an internal retracement. So the internal retracement is like this right at the 78.6% retracement. This is where it found support from. Now, this is something which is really interesting is actually Dow Jones. So Dow Jones has actually been the stronger one because it only retraced to the 38.2% retracement from these lows right here, and it's also kind of a double bottom right here with respect to the 27th of Jan lows. So it's really interesting. And if we just take this on the cash side of things, here we go, it also came very close to the 38.2% retracement. So there we go. Actually, what we had today was a pretty big pullback, and it's just not Monday, which is today, but also the Monday previous week, Sunday night, because it's deep seek. There was a lot of big gaps in the market. There's a lot of volatility coming into the market in the early 2025. I think the year 2025 there is going to be a fair amount of more than average volatility in the marketplace when it comes to equities, and also other markets such as the currency markets. They have started to move as well. The crypto markets, they are moving, which is good for shorter term traders because there is a lot of volatility which exists. Now let's take a look at the Russell 2000. Russell 2000 had a pretty deeper pullback. Here we go. Right here. Uh, 78.6% retracement, and if we take a look at this on IWM, and here we go on the IWM, pretty close to 61.8% retracement also filled this gap. So this is what we are watching in the key markets. Looks like the dollar has weakness coming into it. I think over the course of next couple of trading days we'll get further price action confirmation. And the currencies are also moving, the fiat currencies and also the crypto. We have seen massive moves in the Bitcoin, especially Solana. I've shown you the pattern that we are watching in Solana. And also um, the interest rate markets. It appears over the course of next few days the yields seem to be rising, especially the 10 on the longer end, such as 30-year long bond futures, and also for the 10-year treasury note. I think the yields are because of the that 38.2% retracement are likely to move higher, and the future prices to move lower. So it's going to be really interesting kind of a combination. If the dollar is weakening, then I've shown you a correlation which exists between the yields, the 10-year treasury yields, and the dollar. So it's really interesting whether that correlation is actually falling apart. Because this is what the pattern seems to be telling us. The dollar, there is more likely to be weakness coming in. Further confirmation is pending, and it does appear from the pattern perspective that the yields might actually be rising, but that could be a shorter term move as well, 2-3 days, a week perhaps. So really interesting things happening in this week. So a really key week which is unfolding in front of us. So this is what we have been looking at. The key pattern formation in the S&P 500, just repeating myself one more time. 13th of Jan is a really important low. As long as that is held, the chances are we are in this ABCD pattern formation, and what we might have seen today might actually be this ABCD correction in this shaded area, and if this CD leg could get extended to 58.50 as well, there is a possibility. But if we begin to move higher and take out these highs of 3rd of Feb, which is today, and then chances are we are starting this CD leg higher towards 6300 possibly. Thank you very much for watching the video, and if you found this video of educational value, please do subscribe to the channel, and if you do, then hit that bell icon button. That way you will know when the new videos are posted. And if you learned something from the video, then please do hit that like button. Thank you very much for watching the video one more time. Good luck, good trading, and speak to you guys soon.